Welcome to ShortView Trading. This is your morning market hit for Monday, 8th of February. What matters today and this week for traders? As we mentioned on Friday, markets are one big puzzle. And as well as looking at the Daily Rag fear and greed models that we publish every day with the Daily Rag publication via the website, we also like to look at price action across the globe. What's the message? What are the hints? What are the clues that we're getting from that global price action across a range of asset classes and across a range of geographies? And in that respect, it's pretty interesting to look at the price action amongst key equity markets in Asia at the moment. Because whilst the US is breaking out to new highs in this recent Wave 2 relief rally, and the DAX is trying to test those highs of recent weeks, in Asia we see there's some sogginess, some weakness, various key equity indices that are struggling to break above key Fibonacci retracement levels. And in particular, I'm thinking of the Shanghai Composite, the key sort of headline index for the Chinese equity market. As you can see from the chart in front of you now, a tiny bit better overnight, but really struggling in recent trading sessions to get above that key Fibonacci golden ratio 61.8% retracement level. But it's not just China. Hong Kong and the Hang Seng key market there, globally attuned. Again, same challenge. Getting above that Fibonacci level is proving challenging in Hong Kong. And equally also, if we look over in Korea, a key cyclical barometer of the global economy, the Kospi is also struggling to get above that key Fibonacci retracement level, as you can see from the chart in front of you now. So whilst there's one or two exceptions in Asia, the Nikkei in particular, in general, Asian markets aren't confirming what you're seeing in the US. They're not confirming that price action, that breakout to new highs, and the strength that you're seeing. And indeed, they're questioning it. Just like the US dollar's questioning it. And you can see from the chart in front of you now, in recent months, a weak dollar has tended to be associated with a strong stock market, and a strong dollar has been associated with a weak or sideways stock market. But not so in the past week, as the dollar's continued to strengthen over recent weeks, with that trend continuing for most of last week. The S&P 500 was rallying, bucking the prior correlation. Now, has the correlation broken down, or is there a message here from the dollar about that potential for the wave 3 in this pullback in the US equity market? So when we're thinking about that one global financial puzzle, we like to add to the message of our models what we're seeing in terms of the price action. And the price in action at the moment is questioning the durability and the long lastability of this wave 2 relief rally in the US, much like the models, which are pretty much on sell across the board. As you can see, if you subscribe to today's Daily Rag, you'll see that the models are pretty much back on sell across the board on a 1 to 2 week basis. So for further detail on how we're playing this market, our explicit 1 to 2 week recommendation on equity market index futures, and to see the full update on the 1 to 2 week models, how they're positioned, please see today's Daily Rag available to subscribers via the website. For easy access, click on the link below in this video. Or as you'll see written below the video, there's some links where you can click straight through to the website. So what are we watching this week? What are the big themes for markets? Well, there's 5 key themes we're focused on. Firstly, in terms of macro data, it's a big week for inflation data. Both the US and China produce inflation data on Wednesday for the consumer price inflation. Germany's also got its second estimate, its final estimate of its January inflation data, which picked up quite sharply. So the detail will be interesting in that respect. Secondly, we're watching the Biden stimulus, the progress that it's been making. Made good progress last week. Presumably that'll continue this week. That'll be a focus in markets. Over and above that, some key central bankers speaking, including some of the key leaders in these central banks. Fed's Powell speaking at the Economic Club of New York. Lagarde is once or twice hitting the stumps this week, as is the Bank of England's Governor Andrew Bailey. Then fourth, it's earnings week. There's US earnings continuing, lots of S&P companies, lots of earnings out of Europe as well, particularly with a bit of financials flavour out of the Eurozone and bits and pieces elsewhere. And then finally, it's Chinese New Year beginning at the end of this week, Thursday, Friday, holidays begin, and the China market and data goes quiet from there for a few days on out from that. So that's it from us. That's your morning market hit for Monday, 8th of February. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.